Well, as somebody said, that if you're too bearish on the Indian economy, you will be proven wrong. If you're too bullish on the economy, on the Indian economy, again, you will be proven wrong. That a country needs a steel plant. There are certain basic industries that the country needs from the national security angle. It's not economics anymore. UK is now without a steel plant, and there's a lot of discussion in this UK is this something that we should have come to. So right now I'm quite open-minded to think that a government can run an airline, where that is not a popular opinion anymore. 99.99% of the people will say the government should not be running an airline. But Singapore does. Its economic advisors, it stashed in income tax, corporate taxes. But that did nothing.
That 22%.
Yes. India is one of the lowest corporate taxes in the world.
So why did that do nothing? That was a big change.
That did nothing because businessmen invest only when there is a demand. China has shown that model, that you do incremental change, but you do it across the board, everywhere. Small change, but change everywhere. GST is single digits, corporate sales is single digits. But the question is, the GDP growth relative to these two are still quite high. I don't know what the answer to this, but I would rather go by the GST figure, which is real, which is actual, corporate reports, which are actual.
Welcome to this podcast, this series of Risk and Resilience with Policy Perspectives Foundation. We have yet another very interesting guest, this time a person with possibly 4 careers in his belt. He's been started off as a journalist, then became a columnist, then he became an author, and now he's a fund manager. So a very interesting person, Mr. Debashis Basu. Thank you so much for joining this podcast. Thank you. So we'll dive straight into the Indian economy, the past and the present and the future. So India is said to be the fastest growing economy, and a lot of numbers are put out all the time. So where do you see it going now as per the current status?
Well, as somebody said, that if you're too bearish on the Indian economy, you will be proven wrong. If you're too bullish on the economy, on the Indian economy, again, you will be proven wrong. So we are going to grow because the math is very simple. 60% of India's GDP is consumption. So as long as consumption is growing because of the large population, there is going to be GDP growth. So 5 to 6 to 6.5% growth, depending on the climate, depending on the crisis levels, internal or external, is guaranteed. And that puts us among the fastest growing economies in the world. It's just the composition is such. We are a large country with a large population, and we have reached a certain critical mass. As Mr. Kamath of ICICI Bank once gave us a very interesting perspective. He said at $500 per capita GDP, it's a certain level of growth. You go to 750, it's an accelerating growth. You don't go back to 500. You go to 900. So that constitutes a critical mass, a growing critical mass, until something breaks down, which hasn't happened so far. So we're going to grow. So the question is not that. The question is, what would this growth mean to the vast majority of people who are barely at the poverty line, just above the poverty line? You can define it whichever way you want. India has pulled out millions of people above the poverty line, but it's not good enough. The growth is not fast enough, or the growth is not widespread enough. So the average really conceals a lot of disparity, and that from a public policy perspective, that's from the desirable economics perspective, is not the right thing. So we are nowhere in terms of addressing that.
So compared to the growth models that India has followed since 1947, there have been several and lots of debate and PhDs have been written on it. So where do you think it's all going? And related to the question you gave to the answer you gave to the first question, how do you think we should move forward?
So we initially started with the commanding heights of economy, socialist state, distributive, social justice, so on and so forth. And there was a logical basis for this. There are a lot of people who don't know about India's history, don't know about the fact that there were starvation deaths in the 40s, And India went through a very difficult period post-independence when the two sides were cut and there were mass migration and there were riots and so on. So if you don't know about that history, you can very easily look back and say, oh, we adopted socialism and we were doomed. But the fact is that as people of that generation will tell you, we just didn't have the capital to invest. Who had the money or even the inclination to invest in a steel plant? And it is still a valid point that a country needs a steel plant. There are certain basic industries that the country needs from the national security angle. It's not economics anymore. UK is now without a steel plant. And there's a lot of discussion in this UK is this something that we should have come to? So the only people who could mobilize resources was the government. So we followed that model at that time. Well, the problem of India is whichever model we follow, the problem is we are not adaptable enough. When something goes wrong, we don't change. We don't change fast enough, right? So that model was valid for a certain specific purpose, for a certain specific reason. We should have evolved. We didn't.
The time we didn't have capital, that model was fine.
Yeah. So we should have quickly moved to other different adjustments through the 70s and 80s and so on. Even within that model, there are things you can do well, there are things you can do badly. Well, Korea followed a model of very strong state-led growth, but they saw it to the end. There was a purpose, there was a willingness. I always keep saying, you have to will your growth. It doesn't fall on your lap. So you did nationalize banks and insurance companies, but you ran them like old fusty government departments. You didn't give them targets. You didn't evaluate them properly. You didn't tell them this is what I expect from you, and so on and so forth. So that model.
So moving beyond providing capital to running that capital yourself is where the problem started coming in.
Yeah, but you could do that. See, it's not that I don't now. Maybe I've also gone through a lot of evolution. At one time, I used to think that the government should not be in the business of government. It's not that I think that it should. But I feel every model has pluses and minuses. Every model can be made to work if you have the will to make it work. So right now, I'm quite open-minded to think that a government can run an airline, whereas that is not a popular opinion anymore. 99.99% of the people will say the government should not be running an airline. But Singapore does, right? And so it's not a question of model. We didn't change, that's one thing. We should have adapted quickly. Then there was a crisis. And Dr. Manmohan Singh made a very fatalistic comment that only in crisis we change. Without a crisis, India doesn't get to do the right policies, which is the problem. We should be doing the right policies throughout, adapting, changing, and so on. So we then changed because we borrowed too much. We went through a consumption boom. Sounds funny now, we had $6 billion of short-term borrowings at that time, which broke the country under Rajiv Gandhi. Imports were free, consumer products were coming in, televisions, this, that, and all of that, which broke us because we were a small country at that time economically. So we didn't have the capacity. Right now, it won't break us. We are a larger country economically. But there again, when we changed for 90 days. Everybody talks about first 90 days, MRTP gone, this gone, that gone, industrializing changed. Then what? Then nothing. Then you had by 95, 96, 97, you had a double-digit inflation. IDBI was issuing bonds at 14% or so, which sounds crazy. Government organization. There was liquidity crisis under the great Rangarajan, who was then the Reserve Bank governor. Manmohan Singh, who was the finance minister. India hit double-digit inflation, double-digit interest rates. So where was the reform? The reform was out of control. I mean, there was no reform. It was just big bang, rush of foreign capital.
But what about the decline in corporate tax rates,
that came much later.
In income
so
tax
this was
rates?
A big bang reform of 90 days. Then everybody sat on their hands saying that we've done this.
Okay.
And then everything went out of control because, as I said, it has to be directed. It has to be willed. You can't leave it to chance. You have to be at it, right? Like the companies are at it all the time. They are adapting. So then we went through that liquidity crisis and foreign, again, a question of interest rates and all of that. And then 1997, the Southeast Asia crisis happened, which hit us again. In 1998, we did Pokhran, which hit us again, right? So all of that happened. And 2001, there was a 9/11. So all of that was a period of turmoil when we did literally nothing. Nothing. I remember meeting Mr. Ishad Hussain in Bombay House, and he was crowing that India is the fastest growing country in the world because we still grew that year in the mid-90s at 4%. Nobody was growing at 4%. So that was till 2001. 2002 onwards, China came in because China joined WTO in 1999. And China really took advantage because China is a country which wills its destiny. It had a clear plan. We're going to join the WTO. We'll be in the international framework. We'll get foreign. They were already getting foreign capital from Taiwan, from Hong Kong, from all of these. The SEZs had come up in Shenzhen and Guangdong and all of that. Moment they joined, if you see any curve, any charts of that time, they joined the economy took off, the manufacturing took off. So that required global resources to be mobilized for China. Iron ore prices went up. We exported a lot of iron ore to China. Steel prices went up. It was a boom time. Fortunately, the previous 4-5 years after the bust of .com, it was in 2000, everything was dried up. So when this China came into this picture, all parts of the world were firing on all cylinders for the first time in many years, probably since Second World War, when everybody was reconstructing and there was a great boom around the world. This hadn't happened. Either the engine of US is firing or Japan is firing in the mid-80s, or this is a time that there was global boom. We again mistook that global boom for a great thing that we have done. We had done nothing. We were part of the same global boom, and there was a huge overinvestment all over again in real estate. $40 billion, I remember at that time, in short period, had come from overseas to India. So once again, a lot of people today do these numbers, do a 10-year study. They say 2000 to 2006, 2002 to 2006-07 period was a great time. Manmohan Singh was the prime minister. And they try to extrapolate. They try to draw lessons from that. There are no lessons to draw. We didn't do anything at that time. And that period is not comparable to anything else. Once again, if you have a global boom, again, whoever has at that time.
So you came to the 2008 GFC.
Yes.
And then after that, how do you see things moving up to COVID?
So 2008 was GFC. And 2009 onwards, we did the worst thing again. We got a lot of growth, 8% growth or so, by pumping a lot of money. Between Pranab Mukherjee, Manmohan Singh and Chidambaram alternating, Pranab Mukherjee and Chidambaram alternating home and finance in different periods with Manmohan Singh as the PM, we pumped in a lot of money. Massive liquidity. Kingfisher would get a bailout, for instance. I'm just giving an extreme example. But don't forget that during that boom period, a lot of businessmen who had no business to get contracts, all of them set up power plants, so-called port projects, highways, gold-plated projects 2 to 3 times. So if you do that, you're going to have a lot of high periods of growth, which is a false boom, which happened during 2006-07. 2008 crisis, everything came out. Where would they get manifested? They would get manifested in the books of the capital providers. Who were the capital providers? The public sector banks, which Mrs. Gandhi had nationalized in the 70s. Right?
So the NPA problem
started. You see the problem. Yeah. So the NPA problem started with a model which was 30 years old, which we had not changed.
So how is it shaping up now?
So when 2014, the cleanup started, in a way, I would say, but again, half-hearted, but still, I would say it's a significantly better way of handling the economy. I mean, at least the financial sector and the banks. So a lot of people say so much of money has been written off after 2014. These were the monies which were lent earlier, so they had to be written off. But then nothing changed effectively. It's not the bank managers are more accountable. It's not that the bank chairmen are driven by strictly by performance targets and are rewarded by performance or proper performance targets. So it's an improvement, but there's no new model. Which is why by 2019, you had again an economy which was fairly depressed.
Yeah,
Right?
you've written about this, that
Yes.
just prior to COVID hitting, the
Yes.
growth rate had reached some, for a quarter was
It-
5
four-
or something.
Yeah, 4.8%. And 4.8% was a revised way of counting GDP growth, which is 2% higher.
Could have been lower.
Yes. If you compare like to like with the previous way of method
So
of
COVID
counting.
came and hit at a
Yeah,
bad
but before
time.
that,
Mm.
in the desperation, because nothing had happened, 5 years, you didn't have a new model. You were not cracking the whip. You were not goading and there were no carrots, there were no sticks. Okay? To make India a substantially private sector oriented economy, which is no answer, effectively. So nothing really changed. Businessmen were in what they were doing, what they were doing, which is fantastic. I have a great admiration for Indian entrepreneurs, and I could talk about that in another context later. But the government didn't will to do anything. So by 2019, we were really at the trough, the bottom, and in its desperation, probably guided by its economic advisors, it stashed in income tax, corporate taxes. But that did nothing.
That 22%.
Yes. India is one of the lowest corporate taxes in the world.
So why did that do nothing? That was a big change.
That did nothing because businessmen invest only when there is a demand. It's a very complex thing. Economic actors don't act on one factor on a one-to-one basis alone. It's never the case that if you reduce taxes and suddenly there'll be
several factors.
There'll be multiple complex factors. You have to understand. You have to talk to them.
That's the reason why the investment from the private sector is not enough.
Yes, and it continues. It continues.
But isn't that because most of the second generation, they're opening family offices because they find it easier to sit and
You
invest
have
in
to
equity?
understand that whatever people do is as a consequence of something else. So private sector economic actors will always watch what a dominant situation is and then react to it. You can't take that reaction out of the context and say, look at them, this is not their free will. They're doing it because there's no scope for investment.
So basically outcome measurement is one thing.
Yes.
And
Talent, you have to get talent, you have to motivate them, you have to set them targets, you have to measure them. Where is this happening? You have been in the government all your life. Can you tell me whether even 5% of this is happening? Whether the best people are able to get the best shots at making a change?
So is that the reason why there is a big move all over to say that it's not government that should run the businesses, but private sector should run the businesses?
Private sectors anyway are running the businesses. They need to be incentivized. And they need to be enthused. So, for instance, I can tell you, India has today in chemicals and pharmaceuticals, India has a fantastic crop of companies. They are all self-motivated. No government has asked them to do anything. They're doing it. You know, there's an institution in Bombay. It used to be called UDCT, University Department of Chemical Technology. It has produced an array of businessmen, starting with Mukesh Ambani, the Parekhs of Pidilite, Aarti Industries. Even today, there are people who are doing PhDs, coming out, going abroad, finishing their studies, coming back, doing businesses. These businesses are outstanding. Some of them are world-beating companies. All right, they're small, they're growing. So there is a way, I think, to harness some.
So if you look at, say, one or two examples, chemicals, pharmaceuticals, also
even engineering now.
Yeah, so apparently the Paharpur cooling towers are selling really well all over the world.
Possibly,
Airtel
yes.
now has several companies overseas. So how have these companies succeeded globally, whereas many others have not? Compare this to what China did. So what more can government of India do?
The government has to talk to them. I think the way to do this is twofold. One is the bureaucracy itself has to be completely reformed to be made very, very target oriented. So you have to have that. That is what China has. China has a bureaucracy which runs like a company. It's very easy to dismiss China because people don't know, people don't read.
Which is why people keep going to jail on a regular basis.
No, it can happen. I'm saying that the China is seen to be an autocratic, top-down organization. I'm saying that across the board, they have rewards, they have incentives. When they were trying to attract private capital, every department, including the family planning department, was given the job, go get capital. They run the party substantially like how Marwadis and Gujaratis would run their business.
Okay.
So we can't do that much. We need a little bit of that, of rewards and punishment to be able to. So that's one. When you have this in place, this interacts with the cream of the private sector, calls them and says, tell us what you need. Oh, we need power at 6 rupees or 4 rupees. Then only we can compete. Let's go back and see how we can get power at a much cheaper rate. All right. Oh, then we don't need all of these regulations. Vivek Devroy spent his life looking at irrelevant regulations and legislation. I wish he did that for local regulations and commercial stuff. All of this we don't need. Yesterday, Nassim Taleb tweeted that SMEs in China are like laissez-faire. It's like libertarian. They're completely... He, of course, asked a question. He doesn't know that in full, and somebody contradicted this. But the fact is that the SMEs are relatively free. The control is on the large corporations. There you can't do anything which impinges with national security. You can't do things against the country's interests. They are properly watched. Other countries have it opposite. In India, large corporations get away with murder. Small guys are crushed with local level petty extortion and red tape and so on. We need to reverse this.
So you're saying basically MSMEs...
This is will.
Need a much more level playing field with the big guys.
Yeah. This is political will.
Okay, great. So on the slightly macro question of the economy, which keeps bothering the newspapers a lot, especially the front pages, is the debt to GDP ratio in India is pretty high, 80-85%. And the amount of expenditure that the government of India does, 80-85%, is already stuck in variable costs which are actually fixed, like salaries, pensions, interest, subsidies and all that. So there's not much leeway in the debt to GDP, with some of the revenues also not growing as fast as we would have wanted. And then we have the simultaneous deficit problem. So how do you, in a brief span, see these two problems?
So the thing is, this is a result of what we have done. If all our investments, if substantial part of our investments go into non-productive assets, right? Eventually, you're not going to produce enough of surplus. So the short-term measure is not to take an axe and hack the thing and reduce the government and all of that. You need to do that over a period of time. But you can't disrupt the status quo overnight. There's going to be chaos everywhere. You need to expand your GDP. So the expansion of GDP is going to happen through massive investments, private sector investments, because the government, even this government, with it doesn't show enough political will to focus on productive assets and so on. But so what you ought to be doing is in making massive investments in manufacturing, which absorbs the labor, some of it rural labor. They generate a surplus. Anyway, you're taxing them to death. You have 18% also, GST, which is one of the highest in the world, consumption as a consumption tax. So your income grows. And then you reinvest that money into more productive assets. So this remains what it is. So your debt really over a period of time starts growing down. You can also invite, according to me, I gave a calculation in the last couple of issues ago, I wrote an article, you need about $90 billion of foreign capital. Why? Because GDP, while 60% is consumption, if you want to increase to 8%, you can't increase your consumption beyond a point, right? Your level of wealth and your income levels are not going up. In fact, there's a big concern among the leftist economists, quite genuine concern, that the average wealth income level is not going up. So where is the growth going to come from? It is going to come from investments. Investment is a component of GDP growth. If you make if you make useless investments, GDP growth will increase, as had happened in 2006, 2003, 4, 6, and then that will be a pop and then it will be a drop, right? Because you have not gone on to the higher level. So if you get $90 billion of foreign capital, your debt to GDP ratio will be under control. Your productivity, you have to make sure that it goes into productive assets. You generate wealth. Maybe, there's an incremental capital output ratio, which you apply that. So you net X amount of wealth you generate. If that is focused on export, you reduce your pressure on your rupee and your currency improves. So it's like chain, and it's a chain of things that you should focus on simultaneously. You can't do it one here, little bit, one bit there, one easy thing here, one difficult thing there. No, China has shown that model, that you do incremental change, but you do it across the board everywhere. Small change, but change everywhere.
Okay.
Because they then interact
spread
and
it
create a virtuous cycle.
So at one point, some 5-6 months ago, you'd also written about how corporate growth is lagging the GDP growth numbers.
That's a very fascinating thing that has happened quite recently. I don't know how that's going to get resolved. But into 2024, the Asian Paints MD created a lot of controversy by saying in conference call, saying that I don't know how GDP is measured in India, because the paint companies have always grown at 1.5 times the GDP growth rate. If you have an 8% GDP growth, but I'm not growing at 12% or so. So I don't know how GDP is calculated. So that
kind of a comment.
Yeah. So he had to walk back because there was a lot of pressure on him. But the question is valid, because if you see Nifty 50, which comprises the largest of the corporations, the best of the best, are not growing. Their net profit grew at 4.5% last quarter. Their top line growth is in single digits. So dichotomy is between three things. There used to be, if you see now, GST growth has slowed down. The GST growth is nominal, that is inflation adjusted, it's actual, right? So now it's all fine. GST is single digits, corporate sales is single digits. But the question is, the GDP growth relative to these two are still quite high. I don't know what the answer to this, but I would rather go by the GST figure, which is real, which is actual, corporate reports, which are actual. So these are the real things that are happening. My only conclusion is that the GDP calculation is skewed with investments, government investments, which has been a big boom, a big thing since 2021. Post-COVID boom, a lot of things came back, travel, this, that, all of that. The government started getting a lot of tax revenues, GST and other things, mainly GST, that they invested in railways, in water schemes, Har Nal Jal or whatever, those schemes, defense, highways. So there was a lot of government investment. Now, the return from these investments are poor because they are not done properly. If they were
They take time. These are high gestation projects.
Apart from being high gestation projects, it's done by the government. So there is a lot of inefficiency in it. So you had this period where the real economy, the private sector is not able to grow because consumption is not growing. But GDP is growing because of the fixed investment component of the GDP. Consumption remains the same, which gives you the base number, and the fixed investment, government fixed investment, is pushing the GDP growth. But if this is not productive, eventually, and now GST figures are down, single digits, eventually the government will run out of money. Not run out of money as in a crisis, but it won't be able to invest at that rate which you saw in 23, 24, which is already happening. A lot of people in con calls are complaining 6 months, 9 months, I'm not getting my money from the government, or a lot of these contractors, right? So water pipe companies and so on. So if that happens, now it will all equalize. Your GDP will be normalized to 6.5%. Large companies are not able to grow. GST is single digits. Now it's all perfectly fine. That dichotomy will go, resolving itself in lower GDP growth, not these two going up.
So, what is the big difference that you see between earlier and now, where we are seeing that our net FDI is down, our stock markets are not doing so well in the last 1 odd years? Isn't this all because of the serious issues coming out of new tariff walls, the kind of deglobalization going around in the
Not
world?
at all. China's last month, even at that huge basis, China had a double-digit export growth. All these
Right.
people who are setting up family offices
Hmm.
will now run to Japan and Korea and Germany and say, please come, things have changed, let's start putting up factories.
Great. So, on that note, thank you so much, Mr. Basu. It was great talking to you
It
and
was great
having
talking to you.
your views. And especially what I take back is the fact about equity: spread your growth, spread your consumption, and the will. You spoke a lot about the will and basically doing things. I wouldn't say you said that do it the China way, but do it in a different way and live with the life that we have to live in a range where there is a bottom and there is a top. So that's how we would grow.
If you want to break through that, you need very strong will.
Yes. So we hope to see you as the finance minister sometime. And thank you so much for joining this podcast.
Thanks, Shafi.
Thank
It was
you.
absolutely fantastic. It was a great pleasure talking to you.
Okay. Thank you.